Nkem Azinge is a currency trader at UBA, one of the listed big banks on Market Street, and joining us for this conversation around the debt markets. It's been a very interesting week, which ends today. It's been a very surge in liquidity. On Wednesday, the debt office took nearly 500 billion out of the market, and there's still a lot more money on Broad Street and chasing all of that into the equities market. I will get to the equity space a little bit later, but let's get Nkem to talk to us about the week so far. Nkem, thank you very much for coming through. We appreciate your time coming from FMDQ. Good morning.
Hi, good morning. Thank you for having me.
Great. You guys are the one holding hundreds of billions of naira in liquidity. So we envy you guys at the other side. So give us a snapshot of the week so far on the fixed income side. Will you?
The week started off very quiet. There was really no action until the bond auction on Wednesday. At the bond auction, we saw that the FG offered three different maturities, 2023, 2029, and 2049 bills. We saw the total offering was 155 billion, but we saw subscription of about 300%, which came to about 6 billion. But the only 411 billion was allotted, so that left about 200 billion in account. We're basically saying that there's been maturities. There was an OMO maturity of 400 billion plus that came in. There was also coupon payment, so all that was chasing the bond auction. So that's basically what we saw. There was also an OMO auction on Thursday where they offered the 82-day paper, the 180-day, and also 360-day. And we saw there that they offered on the long end, there was a 280 billion offered, but they only sold 222 billion. Basically, we've just seen a lot of liquidity that has been left unaccounted for, and we saw that also trickle into the secondary market, where we saw yields decline. In the bond auction, we saw rates also decline from 11% on the short end to 9.85. On the 2029, we saw yields also go to 11.125, and on the long end, we saw yields go at 12.56. But this liquidity basically has just been chasing all these securities, and we've seen that the CBN and the FG are very interested in maintaining yields at a low level.
So what's the central bank doing at the back end as far as the CRR is concerned for you banks in terms of your loan deposit, what you do as you play in the debt market, the open market operations? And what is going on here at the market? What's the interplay here on Broad Street? So, Nkem, bring us up to speed.
Well, the CBN continues to debit CRR when they notice the banks have deposits that are a lot. So we've basically just seen that happen. Going into it, we would think that they might readjust that because with the LDR liquidity ratios, with the CRR as well, that's like there's a balance in calculation. We see that they're taking a lot of liquidities from banks to try and avoid banks chasing just assets and trying to force banks to actually grow loans. So we still see them debiting banks and taking away most of the liquidity. But then we see PFA and other investors with high liquidity still playing the market.
Where is the money market overnight, OBB and all of that right now? What's the floor where we see the rate on those 24-hour overnight placements?
Well, just given the level of liquidity in the market, we've seen OBB stay at around 2% and 3% levels. We expect that it would continue to remain at those levels going to next week. The level of liquidity, we also expect maturities next week of 300 billion and coupon payments as well as about 49 billion. So with all of that, we'd expect that OBB overnight would remain at 2%, 3% levels.
Okay, a final one from you. Give us your thoughts on exchange rate market.
Well, exchange rate has remained typically a bit stable. We've seen the rate started at the beginning of the year at about 360, but the IME rate has dropped now to about 3, has stabilized. We expect to see that stability. The CBN has also opened the swap market, so that has helped reserves. So we expect that exchange rate will remain stable at the levels they are at now.
Very interesting. Thank you so much for talking to us, Nkem Azinge, a currency trader at UBA. Thank you so much. Have a great day and enjoy the rest of your weekend.
Thank you very much.
We appreciate it. Thank you so much.